I mean, yesterday we were talking about price target raise. Now we have the latest on Supermicro and NVIDIA. Let's follow up on that.
I know NVIDIA has been all over the place this week as we do see shares set to open higher this morning, but some latest developments from Supermicro definitely positive. So Supermicro announcing the broad availability of NVIDIA Blackwell Ultra solutions. Supermicro is now delivering these plug-and-play ready NVIDIA HGX B300 systems as well as the GB300 NLV72 racks to customers worldwide. Now, Blackwell's Ultra GB300 and B300s can be converted to use up to 1,400 watts per GPU, while offering roughly 50% greater inferencing performance, while utilizing various compute and also using about 50% more of the high bandwidth memory capacity compared to NVIDIA's Blackwell. So having larger memory sizes and faster inferencing speeds has obviously been a critical hurdle when trying to use more complex and more powerful models efficiently. I think this news, though, comes at a great time when we talked a lot about how some of these Chinese competitors like Alibaba, Baidu are trying to cut out NVIDIA and utilize their own chip making abilities. So that was, I believe, a bit of a headwind yesterday as we got more reports on really Alibaba's foray into the space. But seeing this news from Supermicro, I think reaffirms that, hey, demand is still very strong for NVIDIA's most advanced and most costly chips. I know AMD has been read as maybe like the number two, but I think this news just solidifies, first of all, Supermicro is still making moves in this space, but also there's still an appetite for some of these very costly but very efficient, really Blackwell Ultra solutions, which are going to be hugely important for NVIDIA in the coming year.
According to a Bloomberg News report, OpenAI and NVIDIA are getting ready to reveal plans for multi-billion-dollar data center investments in the UK. The project is one of the biggest recent attempts to extend cloud and AI infrastructure in Europe and will be implemented in collaboration with London-based operator Nscale Global. As demand increases globally, it is anticipated that the projects will enable cloud workloads and sophisticated artificial intelligence training. The date aligns with U.S. President Donald Trump's trip to London, where it is anticipated that numerous American businesses from all sectors would make significant capital pledges. The improvements coincide with growing geopolitical competition in technology, which is driving governments in the U.S. and Europe to seek more capacity for their domestic digital infrastructure. It is anticipated that NVIDIA CEO Jensen Huang and OpenAI CEO Sam Altman would participate in the events in the United Kingdom. The acquisitions, according to industry observers, underscore the region's efforts to draw in international investment to bolster cloud resilience, while also highlighting the expanding influence of American companies in forming Europe's AI backbone. Recently, NVDA has been among the most sought stocks. As a result, you might want to think about some of the major variables that might affect the stock's performance soon. The stock of this manufacturer of artificial intelligence and gaming graphics chips has returned 2.7% over the last month, while the S&P 500 composite has changed plus 3.4%. During this time, NVIDIA's industry, Semiconductor General, has had a 2.1% decline. The crucial query at this point is, where might the stock go in the near future? The buy and hold choice is always influenced by a few key elements, even if media stories or speculations regarding a major shift in a company's business prospects typically cause its stock to trend and result in an abrupt price change. At our organization, assessing the shift in a company's earnings forecast is our top priority. This is due to our belief that the present value of its future earnings stream determines the fair value of its stock. In essence, our analysis is predicated on how sell-side analysts who follow the stock are updating their earnings projections to reflect the most recent developments in the industry. The fair value of a company's shares increases in tandem with an increase in profit projections. Additionally, investors are more likely to purchase a stock when its fair value exceeds its current market price, which causes the stock's price to rise. As a result, empirical research shows a substantial relationship between short-term stock price changes and trends in earnings estimate revisions. NVIDIA is predicted to report earnings of $1.23 per share for the current quarter, which would represent a change of plus 51.9% from the same period last year. Over the past 30 days, the consensus estimate has changed by plus 5.8%. The consensus profits forecast of $4.44 for the current fiscal year indicates a change of plus 48.5% from the previous year. This estimate has changed plus 4.3% in the past 30 days. Compared to what NVIDIA is anticipated to report a year ago, the consensus earnings estimate of $6.16 for the upcoming fiscal year is a shift of plus 38.9%. The estimate has changed plus 9.2% in the last month. Because it successfully leverages the power of earnings estimate revisions, our proprietary stock grading tool, the rank, has an exceptional externally audited track record and is a more definitive indicator of a stock's near-term price performance. NVIDIA has been ranked number 2 by due to the magnitude of the most recent shift in the consensus estimate as well as 3 additional earnings-related variables. The following chart illustrates how the company's forward 12-month consensus EPS estimate has changed over time. Even if earnings growth is perhaps the best measure of a firm's financial health, if a company can increase its revenues, nothing happens. After all, without expanding revenues, it is almost hard for a business to sustain a long-term increase in earnings. Therefore, understanding a company's potential for revenue development is crucial. The current quarter's consensus sales forecast of $55 billion for NVIDIA is a plus 55.5% year-over-year change. Estimates of $293 billion and $265 billion for the current and upcoming fiscal years show changes of plus 56.3% and plus 31.6% respectively. In the most recent quarter, NVIDIA recorded $46.74 billion in revenue, a plus 55.6% increase from the previous year. EPS of $0.68 a year ago is compared to $1.05 for the same time. The reported revenues are a 1.3% surprise when compared to the consensus estimate of $46.14 billion. Plus 5% was the EPS surprise. NVIDIA has exceeded consensus EPS projections 3 times in the last 4 quarters. During this time, the company consistently exceeded consensus revenue projections. Without taking a stock's valuation into account, no investing choice can be effective. One of the key factors influencing a stock's future price performance is whether or not its current price accurately represents the underlying business's intrinsic value and its growth prospects. While it is possible to ascertain whether a company's stock is fairly valued, overvalued, or undervalued by comparing the current values of its valuation multiples, such as price to earnings, PE, price to sales, PS, and price to cash flow, PCF, with its own historical values, comparing the company to its peers on these parameters provides a good sense of the reasonability of the stock's price. The need for AI processing power is growing. By 2030, NVIDIA anticipates a huge global potential. At $4.2 trillion, NVIDIA is currently the biggest company in the world. It is therefore difficult to forecast that a stock will have a $10 trillion market value by 2030. But since NVIDIA is expected to take advantage of the enormous and expanding AI computing capability, I believe it is capable of handling the challenge. NVIDIA's stock will climb in tandem with AI spending. This need is what will propel NVIDIA to become a $10 trillion corporation by 2030, even if companies are still a long way from building out the requisite AI computer power. Almost every AI model available today is powered by graphics processing units, GPUs, which are manufactured by NVIDIA. Compared to conventional computing devices, they have better computing power because of a special feature that allows them to do several calculations in parallel. To enhance this effect, they can also be grouped together, which is why data centers with hundreds of thousands of GPUs are sometimes mentioned. Data center capital expenditures set a record in 2025, and it looks like this trend is continuing. In addition to indicating further growth beyond 2026, some AI hyperscalers have already cautioned investors that investment in 2026 will be even higher than in 2025. The money spent in 2025 to buy land, design the facility, and start building will result in these clients buying NVIDIA GPUs in 2026 or 2027, as most data centers take many years to finish. Therefore, it is reasonable to assume that NVIDIA's growth horizon was extended by at least 2 or 3 years whenever an AI hyperscaler announces that they are constructing a facility in a certain area. This is consistent with the statements made by NVIDIA's management to investors on a number of conference calls. The main four AI hyperscalers are expected to spend approximately $600 billion on capital expenditures for data centers in the second quarter. However, when all clients globally are taken into account, they anticipate that number to increase to $3 trillion to $4 trillion. NVIDIA is expected to benefit from significant expansion over the coming years, keeping an estimated 35% of this data center expenditure. This is the driving force behind NVIDIA's $10 trillion market valuation, and I wouldn't be shocked if the company surpasses this significant milestone by 2030. NVIDIA would make $900 billion by 2030 if the lower end of the projected range, $3 trillion, is used, and NVIDIA's share is reduced to 30% to account for some conservatism. By 2030, NVIDIA would have $450 billion in net income if it continues to maintain its 50% profit margin. NVIDIA has made $87 billion in profits and $165 billion in revenue over the last 12 months, which is a significant increase. However, are those numbers sufficient to turn NVIDIA into a $10 trillion business? Keep in mind that this just includes data center revenue. It does not include any revenue the corporation makes from other commercial endeavors. As a result, actual revenue and profit figures are probably going to be far higher. It is still enough to get NVIDIA to $10 trillion, even if predicted data center growth is the sole factor taken into account. By 2030, NVIDIA's stock might be worth $13.5 trillion if we give the company a price-to-earnings (PE) ratio of 30 times earnings, which is a fair price given its significance and growth. Even without the data center industry, that is much over the $10 trillion mark. The lower end of NVIDIA's prediction and the loss of some of its spending pie were other factors in this. It is therefore a no-brainer purchase now, and I am sure that NVIDIA can easily surpass the $10 trillion mark by 2030. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Here, Kevin, what levels are you keeping an eye on?
Yeah, well, Margo, we are seeing a little bit of a sell-off after hitting that 6,600 level here. But overall, when you're kind of looking at the market, it's been a little bit mixed when you're looking at the participation. Earlier this morning, we kind of talked about the 6,610 level, potentially getting above that 6,600, which is a round number. We have a lot of positioning there. Obviously, that's going to be a key area of resistance. But we are seeing a little bit of a pullback. Kind of going into the close, though, if we're kind of looking at that chart, I think that's going to be a little bit more pertinent. What you want to be able to do is hold the 6583-ish area. That has been a key area of support for today, at least. That's really close to the 6580, which is the negative gamma area, meaning there's a significant amount of put positioning at the 6580 level for today's expiration when you're looking at the options flow just in general here. So we've been in a nice uptrend. We just broke that uptrend. Let's see where we find a little bit of a bottom. And if we continue to flush below that 6580 going into the weekend, may not be surprising. Obviously, we have a lot of headlines coming out for next week, a lot of economic data. You have over the weekend risk when it comes to geopolitical risk in the market, and we might be seeing some profit taking. So I wouldn't get too concerned about these red candles right now. We've had a heck of a run, at least for this week, and we'll see how we end up in the close, but it still looks like a 20-point range from the upside to the downside right now from what I'm seeing from the options flow for the S&P 500.
I'm so glad you said that, Kevin, because it's the first time in a while we've seen a chart that just has all of the red candles going down in one direction. So thanks for saying not to be too concerned. What other charts are you watching today?
Yeah, if you're kind of looking at the E-mini S&P 500 on the weekly chart, I think if just stepping back on a Friday and seeing where we are at, we actually did break out of a consolidation range. We've been consolidating for the last 4 weeks or so, and now we actually do have a firm breakout. So this is actually a very bullish signal when you're looking at the market overall. MACD continues to be in a bullish formation. RSI making higher highs on a relative basis. We're holding up these simple moving averages for the most part here. So going into next week, we're actually setting up pretty well. Now, could we actually be maybe on the other side or maybe on one side of the boat too much, given the fact that we do have the Fed on Wednesday? That might be the case. Who knows? Volatility is fairly cheap. But if you're just looking at the technicals overall, consolidation did not turn into a breakdown in the market. It turned into a melt up. And usually that's a sign that we can have continuation over the next couple of weeks.
And I know that there's a couple stocks that you're watching as we head into next week as well. Who are they?
Yeah, a couple of them to keep on your radar here. Because of the options flow, especially for Tesla, Tesla's been seeing some positive call buying activity for the last week or so, but today was actually fairly aggressive. We are seeing a confirmed breakout when you're looking at the chart. Yesterday it had a phenomenal job. When you look at the technicals, it was hitting an area of resistance at around that $370 level, and today we are seeing the follow through, getting close to that $400 level. Let's see if we are going to be able to break through. But when you're looking at the options flow, you're looking at the December contracts as well as early on next year, a lot of those individuals looking at the $500 strike price for Tesla. So a lot of bullish activity for that name. It has been consolidating for a while. It hasn't really been a major contributor for the S&P 500 gains over the last month, 2 months or so, but maybe we could actually see it kind of outpace maybe some of its peers. And then the other one that I'm actually looking at is Microsoft. If you're kind of looking at this chart here, this is a 6-month daily chart for Microsoft on the next slide of the deck. We are seeing a bullish cross for the MACD, the 12 EMA going above the 26 EMA, which is good. Microsoft started pulling back pretty aggressively over the last couple of weeks here, but we have consolidated, broke above the 20-day moving average this morning, testing the 50-day moving average. We're seeing that candle pretty much pen between the two, and this could be another one where it breaks the downtrend when you're looking at the RSI, MACD going into a bullish cross. This one could have a little bit of a stealth rally. There's two stocks that usually have stealth rallies before anybody really starts to talk about them, and it's Google and it's Microsoft. And so Microsoft is one kind of keep on your radar here, seeing a lot of options flow on that front too. A little bit more at the money, the 450s, 460s expiring in December seems to be catching a little bit of a bid.